Really clear chart. What's that space? I was going to give you an example too. All right, so inefficiency. It's your draw on price. So just like this right here, all right? You see this gap right here? You see how this wick is not touching, there's no wicks connecting. That's inefficiency right there. See that? You see how there's no wick on this candle touching that wick?
Yes.
That's your inefficiency. That is your draw on price. The market wants to what do you call it? Fill that inefficiency. So that's a draw on price right there, right? So if you're looking to take a trade to the upside, if this is your area of interest, this is a confirmation the market should most likely go to that area because it wants to fill that gap, right? Along with the liquidity that's above these highs. If you look at the market overall, we are bullish. Do you see what I'm saying? That's what the inefficiency is, right? I'm trying to show you some examples of this where it makes sense for these entries. I just can't seem to see it on this particular time frame. This is not the best one. I'm not able to just see it there. So if I put the arrows on there, I could probably show you one. I mean, this is an example of it here. Yeah, this is an example right here for this one to the upside. All right, so look, you see how we have this move here where the bank is creating liquidity, right? We have this push to the upside. So we have a break of structure right here. This candle right here broke structure, right? Actually, this entire move broke structure, really. You just say that whole entire move is break of structure, right? Now, because of this move right here, this is the candle that caused this break of structure. And actually, 30-minute might even be better to look at. So it's clearer, right? You see how this candle is the last down candle that caused this break of structure, right? So what I need to see is the last down candle that caused a break of structure, and did that candle cause inefficiency? Did it create inefficiency, right? After the break of structure. Do you see how there's a gap right here? I can draw a line right here, look. Boom.
Yes.
Boom. There's a gap. This is what makes this order block valid. It needs to be the last down candle that causes the breakout, the break of structure, and then it has to show inefficiency to make this a valid order block. And as you can see, it comes right back to 50% of that order block. And that's what I've been studying, is trying to focus on that. So, and it's weird because I'm still not great because I probably would have took a buy right here and then got stopped out right here. See what I'm saying? Because I really didn't think the bank. I honestly thought I think the bank would actually go use the wick as part of that order block. I thought it would just be the body, So that I might have got stopped if I kept my stop loss tight. I might have gotten stopped out. But that's what I've been focusing on. That's something that you should get a better understanding of how to view that. Another example would be here, right? Right? Because remember I said the bank is going to create an order, right? So this is your breaker structure, right? Right here, right? Right? And then this is the last down candle before price broke structure. So if you look at this, right? This one's weird because we did break structure again, right? So honestly, I would think this one would be it, but this is the last down candle, and then out of this candle, there is inefficiency within these candles. And actually, there's an order block. There's an inefficiency right in between here. I can draw a line in between it so you can kind of see. They're not touching, right? They're not touching, right? I draw it perfectly right there. So this is the last down candle before this first breakout. Do you see how it comes right back to that candle? See what I'm saying? You need to see the order block that causes the breakout, and then it has to cause some inefficiency out of that order block, or after the order block is created. It'll come right back to that candle. This one is a little bit tricky because I would have thought it was this one because this one actually broke structure too. But honestly, you probably still would have won because look what happens. It does come back. My stop loss would have been below here. Spread doesn't get me. I probably would have still won that trade. That's just something that you should practice focusing on, so you get a better understanding of why the market pulls back the way it does. This is another example here. And this one's tricky too, right? This is the last down candle. The market goes up, pulls back, we break structure. This last down candle causes inefficiency in between these two candles right here. See right here, there's a gap. So market's going to come back into what? The 50% of this candle. Right? Look, 50% actually went to 23%. That's fine. Right? And then the market goes up. See what I'm saying? So that's just something that you might want to back test and see if you can identify that. So you know where the market's going to pull back to. Right? But